Welcome to Profiletraders. This is Reza and you're listening to my market analysis for May the 19th. During the previous analysis, when we looked at the chart of ES on a daily, I mentioned a couple of things. Number one, that 2025 was a very critical key area of support that if broken, we were subject to exit this head and shoulder formation with a 70 to 80 points downside objective as a target. However, I also specified that the way we were coming down had very much so no impulse in it, and the way that we were coming down is called what you call a labored move. Labored move is when you come down and it's very hesitant and you have a lot of counter pushes against the down move, and usually when this happens they accumulate on the way down, which makes the move having no impulse on the downside. As a result of that, I said that you need to be very careful, because once it comes to 2025, it may show you that it is actually trying to break it, but the break will fail, and from that point on a bounce normally should take place. And I also show you the chart below that on the way down there was absolutely no exit of real capital out of the market. So today we did reach the 2025 after we heard yesterday that the Federal Reserve is entertaining a possible rate hike this coming meeting in the month of June. But as you know how the game is done, while the Federal Reserve said that they may, it's not even a sure thing whatsoever, that they may consider a rate hike, on the other hand you already have 3 central banks that lined up indicating that they will do more QE. Bank of England, Bank of Japan, Mr. Draghi, and the Chinese. So the game is that even if the Federal Reserve takes the rate higher one more time, because they are so badly cornered and they have lost so much credibility so far, they will finance trillions of dollars to the other central banks to continue the QE indirectly through their banks. So market has absolutely no worries, zero worries that this gravy train will be derailed by the Fed. It will not happen. There is still trillions upon trillion dollars of dirt cheap money available to the Amazons, available to the IBMs, available to the Googles, available to any listed company in the New York Stock Exchange and Nasdaq and elsewhere, to borrow at 0% and bring that money in and buy back their own shares all day long. That is why you see such a detachment between the stock market and the reality, because it doesn't follow anymore the business cycle. Even if business cycle is gone to zero, as long as these corporations will be able to borrow trillions of dollars dirt cheap and use exclusively 99% of that money to buy back shares, this market is not going to drop. So now that the 2025 did hold, we could definitely say that this is a very important short-term bottom. As now this is a short-term bottom, what are the upside objectives that we should look for? First upside objective is 2045. Second upside objective is 2058. Third upside objective 2070, and then 2076. Once we reach the 2076 and clear it, we are going to be again in an attempt to go reach the summit, which is 2100 and change. And that flat top that we have going on ES here, you see, it's a very flat top. That top doesn't look to be finished. Matter of fact, now we could possibly see in here an inverted head and shoulder. This being the head, this being the left shoulder, this being the right shoulder. Once that 2100 and change top breaks to the upside, we could definitely see firework. And I have one upside objective that calls for eventually 2138 to be reached. So it is an extremely frustrating market for the sellers, because there is absolutely no such a thing that exists anymore. If it does exist, it's very short-lived, is very fastly reversed, and it's a very unforgiving market when they start to crush the back of the sellers on the upside. So if there are pullbacks again towards 2025, it's definitely support. If by any chance an outside event of any kind breaks this low with 10-15 points showing me that the break is real, then we could definitely look for a break of a head and shoulder to the downside, and then the downside objective could be 1750, 1760, but that didn't happen at all today. And this kind of a break, when you see it happen where you break, come back into range, break, come back into range, break, come back into range, it's all indication that the break is most likely fake, and it was definitely the case today. Now looking at the crude very briefly, on the channel that I showed you on the daily, on the last report, I said between 50 to 51 we should encounter significant resistance. Well, yesterday we got very close to 50. It was at 49.70. We got a little bit of a pullback, but again, as there was very little outflow of capital out of the market, today immediately the program buys picked it up. So now we're gonna go again for the test of the high between 49.30, which is that point of control, to the 49.60 will be an area of resistance. Once we clear that, we're gonna go hit 50. At 50, it will be very difficult to break it, because if we go up there in one shot, we will have already a move initiated from 47.25 to 50. That is about 1.75 2.75 move up, and once it's gonna reach resistance, it may exhaust itself. But if it consolidates below 50 and then decides to break it, most likely the break of 50 will be successful, and the next level to look for is 51. So as of right now, 48 is support 1, 47.6 is support 2, 47.25 is support 3. On the upside, 49.30 to 49.60, and past that we will be looking for $50 a barrel. This is it for today. If you wish to learn market profile, you can get all my 5 courses, 1-year membership to my trading room, all of it for $9.75. 30 days money back guaranteed. You don't like it, you get your money back. Check it out, profiletraders.com. Thank you for listening, and to the next time.